to talk about the bigger picture. I've said a few times that it's unlikely that the bull market is over. And why do I think that is the case? Now, one of the reasons is the RSI. This is a lifetime log chart of SPX. Now, I've not done this for the price, to look at the price. I've really done this just to look at the RSI. What does the RSI tell us here? Well, we had a high on RSI. How many times has RSI come down from a decent peak like this over the 70 level on the monthly RSI? Sorry, over the 80 level on the monthly RSI. We've only got a few occasions of this, and we've got some near misses here. This is over 80, this is over 80. Not too far away, over 80, not too far away, over 80. Pretty much at 80 and over 80. These are all the examples in the past. How many of these turned down into a really serious retracement without having either divergence on the RSI 14 or RSI 5? And the answer is none, not one. That doesn't mean we can't do it this time. There is always the possibility that something unprecedented will happen. But from an analyst's point of view, forecasting that, making your primary scenario that something that has never happened before is going to happen now, is generally an extremely poor way to go, which you're only going to do if you have strong preconceptions. Generally speaking, it's a given at that stage that you're a bad analyst, because at the end of the day, you're trying to impose your conceptions on the market, and you are nothing to the market. If you're not trying to read the market, then you're not really any kind of analyst at all. This is a powerful weight of history. Never in the history of the SPX have we seen an RSI spike like this that has not had a divergent higher high on price, which is then diverged on RSI, either usually on the RSI 14, but otherwise on the RSI 5. It's not the case on buy signals. Buy signals, they tend at the lows, they tend to be faster. So while you do tend to get divergence, it often isn't obvious on the monthly. Tops tend to be slow. They take their time. They don't tend to be immediate. You tend to see at least a decent decline before the high is made. Now, so this is basically telling us that we are unlikely at this stage, given that we have no negative divergence on the RSI 5 or the RSI 14, it's most unlikely that we're at the end of the bull market now. Now, whereabouts in the bull market are we? Well, I was looking at this at the weekend. We've got, hang on, wait a second. Now, that's the pattern from 2016. We've broken that slightly, but this is only a smallish part of the overall picture. The bigger picture is this. Now, some of you have been around a really long time, i.e. before we started the Art of Chart, will remember that I was grumbling and wondering aloud why it was that we hadn't gone a little lower at the 2016 low and touched rising support from the 2009 low. And the reason for that is, it's now clear, is because this pattern that we're currently in isn't from the 2009 low. This is from the 2011 low. Now, most people thinking that this is a bull market from 2009, they're wondering whether this is a bear market. But actually, most of them don't even remember that there's already been a bear market, a technical bear market, a retracement of more than 20%. And that happened in 2011, and it was here. It looks pretty small, but it was pretty serious at the time, and these were some pretty big moves. And this was a retracement of more than 20% from high to low. This was a technical bear market. Don't hear much talk about that nowadays, but it was. So we really got, this is wave 1. This was retracement wave 2. This, I think, has been wave 3. And as with a number of wave 3s, it's been quite difficult to call while it has been ongoing. The pattern's only really clear now we're at the end. Now this gives us a potential target for this move at this trend line here, which is currently in the 2160 area. But we do not need to make this all at once. So actually, looking at the cycles on this, we've only really got till the start of April. It was the start of May, but it's been pulled forward by the fast action that we've seen on the move down so far. We don't think there's time to get to this level here. We're thinking more in terms of 2400, and it could be that we're going to go back and retest the high from there, and it may be that would be the end of this wave 3, this could be 4 of 3. Not 4 of the overall 5. We need to know that this wave 3 has finished, and we'll really know this wave 3 is finished when we reach this trend line. We don't know it's finished yet, although we are reasonably confident that it's not going to go over this trend line here. That trend line is rising at about 225 handles a year. There's not a huge amount of upside. Could we reach 3,000 later this year in it? Yes, we could, without breaking this trend line, and we may. But as and when the wave 3 finally finishes, and we're thinking in terms of really a retest on relatively marginal higher high on this one, then we will see a larger retrace, and it may be that we're going to see the trend line then. But in terms of the timing, what we're thinking is down to 2400, 2450 by end of March, beginning of April. Then we're likely to see a new all-time high. This will not be the last all-time high of the bear market. This is unlikely to be the full fifth wave of 5. If we may only make a retracement as far as 2400, really, if this was the main wave 4 after the wave 3, I'd be thinking this trend line would be tested and it might well break. Probably would break. And we might then actually go and test the rising support from 2009, or alternatively establish a new trend line below, which might then make clear what if there's going to be an overall pattern for the entire overall bull market from 2009 low. At that stage, it might then become clear because of where this low lands. So that's what we'd be expecting there. We don't think we have time to do that now. We might be wrong. It could be that we are going to make this, and that's certainly a possibility to bear in mind. But it looks as though the timetable's too tight, and we're not going to make it now. Chances are we're going to trickle lower, head down to the 2400 area, probably find support there. If we break through that area then with confidence, then we're really looking for this trend line here. I've currently got that in about the 2160 to 70 area. And at that stage, chances are the wave 3 has finished. And we're in the major wave 4, and then we would have a major wave 5 to come. That need not go a lot higher, but it could go a lot higher. We'll see. And obviously, these tend to be less disordered than wave 3. So this wave 3, this has just been a long grind, very hard to call. Wave 5s tend to be neater and easier to call than these, so I'm looking forward to this. All right, so that covers us on